What is going on, guys? Welcome back to the Traveling Trader. Happy Monday to you. Let us get right into it. I wanted to get into the Bitcoin and crypto report first, and then we'll go over the traditional markets later. And I'll talk about a few of the coins and stocks that I'm holding. Obviously, my full portfolio is available for those that are part of our traders group. Link is in the description below. Let us get right into it. All right, so looking at coinmarketcap.com, we see that we're currently at around 250 bill market cap, a little bit of volume injection into the market. A few of these top alts have been gaining. Litecoin, we did send out a trade alert on Litecoin on when to enter that. I'll get into Litecoin's analysis in a second. EOS surprisingly up almost 5%. BNB continues to kill it after hitting around $14 or $15 a couple of weeks ago. It is steadily climbing to around $20 to $21. And we see that most of the top alts are holding steady or have a nice single-digit gain. You know, not too dramatic. I'll talk about XRP in a second, as well as there is the XRP swell event this week actually, and what that could mean for XRP's price. All right, so let us get right into it. Bitcoin dominance currently sitting at around 70% after hitting a high of almost 74% towards the beginning of September. Looking at Bitcoin itself, you'll see that it's forming a descending channel here. Now, this descending channel, it continues to be respected going all the way back to June after hitting those highs of 14K. We continue to make lower highs and lower lows, and we do see this death cross here between the 50 and the 200. Now, what do I think is going to happen in the short term? I think we'll continue to respect this. As a matter of fact, I think we will go down once again in the short term. If you look at the Bitcoin shorts, after the short squeeze that occurred in the last week of October, that propelled us back to above 10K before resettling again to the 9,000 level. You see that shorts have hit a double bottom. They're back at the swing low that we saw back in July and not really steadily climbing. So there isn't a potential short squeeze effect that could occur here that could take us and break out positively from this descending channel. There isn't a risk of that short squeeze. So with low volume, low volatility, the death cross happening, I do think that we might see lower highs again. Now, here is the kicker. This might actually be the last time to get some cheap BTC. If we do see, a retracement back to around the support level of this descending channel, that could be the last time that we're able to grab up some cheap BTC before a major bull rally by, the end of this year to next year and possibly beyond. Timing is not really my thing. Exact timing is not really my thing, and it shouldn't be yours either. I mean, technical analysis isn't about predictions, i.e. Bitcoin will be a certain price by a certain date, but it is more about recognizing the trend, recognizing support and resistance, and how to set up your trade strategically to align with that. So the reason I'm saying this could be the last chance to gobble up some cheap BTCs, if we look at the 1 month chart, Bitcoin looks like any other market, right? It's just if you look at the 1 month chart, a long-term chart, is just a straight trajectory upwards. Even if you look at something like the S&P or the Dow Jones or any market really, even going all the way back to the Great Depression, those crashes look like minor blips on a long uptrend. Same thing for Bitcoin. That's why when, naysayers say that Bitcoin is just the new version of tulips or that Bitcoin is really a bubble and all hype, well, you have almost 8 to 9 years of price history that tells you that speaks to the contrary, right? It is very unlikely that an asset can last 9 years on a market with a chart that's very similar to other commodities and still be worthless. As a matter of fact, if you objectively look at it, Bitcoin is the most appreciating asset of all time, or commodity of all time. I mean, it was under a penny, going all the way up to 20K. And based on this 1 month chart, we will be back at 20K and higher. And we'll look at a Bitcoin price model as well shortly here in a second. But looking at the 1 month chart, you see that there was a blip here at 2014 to 2015 where we fell below the 21-month EMA. This white line here is the 21-month EMA. We did that again in the end of 2018, right? When we crashed all the way down to about $3,200. Now, what happened back here in 2014 and 2015 is once we crashed below the 21 EMA, we came back to retest it after we broke out above it. We came back to retest it before starting another bull rally. Same thing is happening here. We broke out of the 21 EMA. We did go back to retest it last month in October, as we suspected. However, if we do, like I said, if going back to the one-day chart, if we do in the short term see a decline, down to 8K or below, that might be your last chance to grab BTC at that price before a next rally. Of course, we're not fortune tellers, and the market has a habit of establishing firsts, right? So just because it happened before doesn't mean it'll happen exactly the same. But what do you have to go by except for previous history, right? This is right here a mapping of all of the trader psychologies, all of the news, all of the fundamentals, everything projected onto one chart. Oh, and one other thing I forgot to mention is the 50-month EMA, which we did test as when we broke below the 21 EMA. This orange line here is the 50-month EMA. Same thing happened here. We broke below the 21-month EMA. We tested the 50-month MA when we hit that 3,200 swing low at the beginning of this year. And people forget that it was just the beginning of this year that Bitcoin was at 3,200. It seems like forever ago. So yeah, sign up to the trade alerts. Excuse me, still downing my morning coffee. But yeah, sign up to the trade alerts if you want information on my entries and exits, exactly how I'm playing Bitcoin as well as other coins, and then we'll get into stocks later as well. Looking at Litecoin, this one finally broke above the 50 MA on the daily chart after forming a long head and shoulders going all the way back to March, breaking below the neckline, finding support at the 0.786 fib level. We now are breaking above the 50 MA, which is, if you follow the trade alerts, and I'll give this one to you as a freebie, this is a buy signal on Litecoin. I was saying that, if Litecoin does fall back to the accumulation zone, I'm a buyer at any point between $50 and $58, or the condition that it breaks the 50 MA. I would like to see it close above the 50 MA. Of course, you can go down to the lower time frames and assess whether there is an optimal closing there. But on the daily, I would like to see it close at above the 50 MA, because we did blip above it, just above it a couple times back in September. So just because it's above the 50 MA doesn't mean that it'll stay there, right? So we want to see established closes in order for our breakout trade to be successful. Moving on to XRP, looking at XRP, we were swing trading XRP going all the way back to the summer, really, ever since, when it does get down to the 23 to 25 cent level, I was buying XRP, selling back at the 28 to 30 cent level. And as you see, that swing has really provided some nice gains. Now XRP is resting on the 21 EMA. Again, this white line here, we do see the potential mini golden cross between the 50 and the 100 MA. That is a bullish sign, and it is just sitting on the 21 EMA. Now, there is a swell event. In my view, the swell event is really not, nothing significant. But if you look at the previous history, the 2017 swell event, we saw 115% price increase right before, 220% in 2018. And this is from a Twitter user called Galaxy BTC. Not sure if this is his or her original idea, but this is where I saw it. And here is the chart outlining XRP's price action before and after the swell event. So in my view, it is actually pretty low risk entry, even though I think that, again, it is insignificant. Traders are getting more savvy and information is more priced in than it was before, right? If everybody knows that the swell event is coming up and that we might see a pump before the swell event, well, that news is potentially already priced in. However, because crypto is still irrational in a sense, we could see a pump to above 30 cents. So because we're sitting at the 21 EMA, your stop limit can actually be pretty close to your entry here for a low risk, high reward play. And again, this was sent out in the trade alerts. One thing I want to mention with respect to Bitcoin, but it applies to all trading, that, if you're not a swing trader, don't act like one. So in terms of waiting for the bottom or trying to play the swings, when you're not a swing trader, when you know that all you want to do is accumulate Bitcoin for the long term, you're better off either dollar cost averaging or buying on these significant dips, but trying to time the bottom and play the swings. That if you don't have the time or the patience or the interest in swing trading, don't act like a swing trader. If you look at the Bitcoin price model, and I've shared this in the past, but if you look at the Bitcoin price model over the long term, I mean, as I stated before with, this chart here, the long-term 1 month chart for Bitcoin, if you look at this, we continue to establish new highs, and we will establish a higher high above 20K in the future. I don't know if that's 2020 or 2022. Who knows? That's not really my thing, but as long as you're buying at the identifiable dips and accumulating cheap BTC, and you're in it for the long term, then you'll be fine. Trying to time the bottom or act like a swing trader or day trader when you don't have the interest, the patience, or the time to do so is going to get you burned in the market, because you're going to end up panic selling too early and buying too late. I've seen it time and time again. So just to keep that perspective in your mind. All right, guys, that is it for the crypto market update. And again, I do send out my portfolio for both the stocks and crypto. It looks just like this, obviously not blurred out, but you do get the full portfolio if you sign up to the trade alerts down below. You also get access to our premium trading group, where I send out the alerts and we discuss trades, strategies, etc. in our Discord community. So sign up if you want access to that, and let us get right into the traditional market. All right, so looking at the traditional markets, obviously all the markets are up right now about 0.5%. This is actually something that I suspected would happen, if we kept knocking on resistance's door. This is actually an S&P 500 fractal idea that I published. You could see here in June 20th, looking at the market from 2015 to 2017. If you look at it, it looked so similar, where it formed an inverse head and shoulders. There was initial test of resistance before that, the inverse head and shoulders, a test of the 200-week MA before establishing new highs again. And if I load the new bars, you'll see that it's played out almost exactly like that, right? It looks exactly like it did back in 2017. And if we do get a trade deal, a successful trade deal with China, the optimistic jobs report, the Fed continuing to cut interest rates as it did last Wednesday, we will continue to establish new highs going into the holiday season, as I suspect. All right, let's go over a couple of plays in our portfolio. UWT continuing to kill it, up another 6% today. This is one that, it's just been reaping or producing major rewards for us going all the way back to January, right? Anytime it hits below $10, I buy UWT and write it up. It did that a few times in January, going back to June as well. And then consistently from August until now, anytime it falls below $10, I buy and then sell above $11.50. And that swing has been extremely profitable for us. Of course, these leveraged ETFs are meant to be short-term plays. You're not meant to hold this for a very long time, because you could get burned, especially in the futures markets or something that's based on the futures markets. But UWT is the gift that keeps on giving in 2019. Disney is poised to announce their streaming service, or not announce, but release their streaming service next week. Their earnings are coming up this week, and I think Disney is still a great long-term hold in anyone's portfolio. Grubhub plummeted 43% last week, and this actually might be a good long-term short. I'm still thinking about it, and the reason is the Grubhub CEO actually described it perfectly. What he said was that there isn't any loyalty when it comes to these food delivery services. And what I think is there will have to be some sort of collation or merging activity or acquisition activity between these services, because, as a consumer, you're not loyal to anyone. If you look at Grubhub or DoorDash or Uber Eats, all you're looking for is who is going to deliver my food for the cheapest price. And that's essentially, I've even done that before, where, on my phone, I've opened up all of the food delivery apps to see what restaurants are available. And if the same restaurant, the place that I want to eat, if it's cheap, if it's $5 cheaper on one app, that's the app I'm going to go with. There's really no loyalty there. And so I think investors recognize that, and the CEO confirmed that that air of disloyalty in this market niche. And so shares plummeted by 43%. And I actually think that we could actually see potentially the swing low that we saw back in February 2016, where we're below $20. There really isn't, with negative earnings, low volume, negative market sentiment, there really isn't anything that's upholding Grubhub's stock price, right? This could be actually a good long-term short or a sort of options play. One last one that I'll look at is FITBIT. I'm looking to short FITBIT ahead of earnings this week. It continually reports negative earnings, and even though FITBIT is going to be acquired by Google at around $7.35 a share, it is still beholden to earnings reports until that acquisition is complete. And actually, you can play this using options, right? Using put options or call options, depending on, and I won't get into the specifics of options here, but this is my play options account, or my paper trading options account that I use when I am doing these YouTube videos, so you don't look at my real account. But it's a great simulation if you are looking at certain options trades. So I'm looking at this options trade here. It's a very low risk, potentially high reward options trade with regards to FITBIT, especially if the price current, if you view the price as being inflated currently, and there's a potential for it to decline after a negative earnings announcement this week. This put debit spread, for instance, will cost you $60 with a potential to make $440 if the price does decline due to negative earnings. And of course, you can play the expiration date out. In this case, this expiration is December 14th. So you do have some time to make adjustments if the option goes against you. But I do think that it is a pretty low risk play. And as you see in FITBIT's history, every time that it misses earnings, we do see a price decline, as you see here back in April or even back in August. Even when it does make earnings, like back here in July, it beat the expectations, but the earnings report wasn't optimistic. But you see this huge gap down where it went from about $4.38 and opened up at $3.30. So a whole dollar difference between closing of the previous day and opening after earnings the next day. So it's actually a pretty low risk play that I'm willing to take on here, and I'm looking at it seriously. I will post it in the trade alerts before. All right, that is it for this video. I hope you got something out of it. If you're having trouble with your technical analysis or want to take it to the next level, I do one-on-one video conferences where we go over technical analysis, trading strategy, etc. That same link is in the description as the trade alerts. It's just the highest tier. If you want access to the trade alerts and the premium trading chat, that same link is in the description. Subscribe to the channel, hit that notification bell, leave a thumbs up if you got anything out of this video, leave a comment. I love to hear from you guys. Leave it in the comment section below. Stay safe out there, guys.